Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 22nd of July 2022. I'm back in Mexico, so I'm recording from Mexico today. Again, it's really hot, so I have to have the fan or I'm not going to be able to concentrate. I don't have air conditioning, but I do have a better internet connection here in Mexico than I had last night at the Hilton in LAX. Go figure. Okay, my first preferred wave count is still bearish for gold. It expects a cycle degree trend change occurred in March 2022 and a new bear market is underway, but price won't move in a straight line. The first 5 down, labelled primary wave 1, is now complete, and I expect that primary wave 2 has just begun. There is reasonable support from classic technical analysis for this view. I am expecting a multi-week to multi-month bounce or consolidation has just begun. Bearish targets at cycle degree remain the same, 1037, super cycle degree, the final target 657. The bullish wave count, perversely, actually requires price to move just a little bit lower. It needs to make a new low below 1677.64 before the next bull run should begin. If price just turns up here and it doesn't make a new low below 1677.64, the probability of the bullish wave count will reduce further. The target for more downward movement for that one is still 1673. Elliott Wave Analysis first, as usual, classic analysis last. This is my preferred wave count. At super cycle degree, it expects a B wave ended here and a C wave is underway. The bigger picture is an expanded flat correction. Here's the end of B, and C must subdivide as a 5-wave motive structure at cycle degree. And so that will be labelled 1, 2, 3, 4, 5, and the final target for it to end is at 657, where supercycle C would reach 1.618, the length of supercycle A. Within supercycle C, cycle wave 1 looks like a very good looking leading expanding diagonal. Cycle 2 fits nicely as a zigzag and it's very, very deep. Second waves following leading diagonals and first wave positions are very deep. This wave count has a great fit and follows common patterns and tendencies. Cycle wave 3 may only subdivide as an impulse. I'm so sorry, I've just noticed this floating there, that needs to go. Within cycle wave 3, primary 1 looks like a really good looking complete 5-wave impulse labelled intermediate 1, 2, 3, 4, 5. There's some support from classic analysis to see a low over it this week, and so I expect that primary wave 2 may have just begun and it would most likely reach the 0.618 Fibonacci ratio at 1919.03, but in the first instance we'll look out for possible resistance at the 0.382 Fibonacci ratio at 1828.29. Let's see if this structure is complete if price gets up to this first ratio. If it gets there and the structure is complete and we see some bearish technical evidence to say the bounce is over, then it could end there. But if it just keeps on rising, then the more likely 0.618 Fibonacci ratio will be used. Primary wave 2 should be expected to last weeks or possibly a few months, and it may not move beyond the start of primary 1 above 2065.89. When primary 2 is complete, then I will be able to calculate a target for primary 3 for you. I cannot do that yet because I don't know where it begins. The target for cycle 3 is for it to reach 2.618, the length of cycle 1 at 1037. I'm using that Fibonacci ratio because cycle 2 is so very, very deep in relation to cycle 1. When cycle 3 is complete, then a multi-month to maybe even a bounce or consolidation to last 1 to possibly even several years for cycle 4 would be expected, and then finally cycle 5. So the whole thing is going to take quite a few years to complete. Let's take a look at the daily chart. We're going to look at the structure of primary wave 1 beginning up here. This point up here, it fits beautifully as a 5-wave impulse. Intermediate 1, intermediate 2 an expanded flat, intermediate 3 is longer than 1, intermediate 4 a double combination, there is alternation between 2 and 4, and intermediate 5 fits very nicely as a complete impulse at this low, with technical evidence to suggest we may have a low in place for the interim. Primary wave 2 would most likely subdivide as a zigzag. That'll be labelled ABC, and it should take weeks to possibly months. At the daily chart level, this is an alternate, considering the possibility that primary 1 may not be quite over and that it may have one more low to complete before we see a trend change. I will be open to this possibility. Let's just go back to the first chart. I want to see this channel breached for really good confidence that primary 1 is over. But before that, if we see new swing highs, well, probably above this point, but that would come after a breach. But if we start to see some more upward movement that looks disproportionate to these corrections within intermediate 5, if price continues up early next week, I'll probably discount this alternate. But for now, I want to be open also to this possibility. I'm just labeling intermediate wave 5 a little bit differently. The target here is for intermediate 5 to reach equality in length with 3 at 1672, and so if the low is not in here, I expect it's going to come very soon, and this is a possible target for it. At the weekly chart level, this is a bullish wave count. It considers that the grand super cycle 4 was over in December 2015, whereas my bearish wave count considers it's continuing as an expanded flat. If it was over at that major low in December 2015, then the bull market, or secular bull market, is underway, and I'm going to label that super cycle wave 1. Super cycle 1 unfolding as an impulse, with cycle waves 1, 2 and 3 complete, with 3 over here and 4 continuing further as a zigzag labelled primary A, B, C, subdividing 5, 3, 5. Primary C needs to make a new low below the end of primary A at 1677.64 to avoid a truncation. It has not done so at this week's low. I will not accept a Elliott wave count with a truncated C wave. I know it's a small amount. If we see substantial upward movement, I will have to label cycle 4 as complete with a truncation, and my judgment, if that happens, will be that this probability of this bullish wave count would be quite substantially reduced. Gold does not exhibit truncations readily. In my over 10 years of analysing this one on a daily or weekly basis, I think I've only ever seen it do that once or twice. There are some markets that have a tendency to do that, like the British pound, US dollar pair, but gold just doesn't tend to do it, and so I don't want to label cycle 4 over there. This bullish wave count perversely requires a little bit more downward movement to have a reasonable probability. The target remains the same as last week. Primary C will reach equality in length with primary A at 1673. The invalidation point is the high of cycle 1 well off to the left of the chart, 1303.51. At the daily chart level, we're looking at primary C, intermediate 1, intermediate 2, an expanded flat, intermediate 3, longer than 1, 4, a double combination, and 5 continuing lower. The labelling of this wave count is the same as my alternate daily chart for the bearish wave count. The target's the same because I'm using different wave degrees to calculate it. Okay, classic analysis. Let's take a look. At the weekly chart level, a downward week with a lower low and a lower high, a decline in volume. The candlesticks closed green, so we need to look inside the week to see what the volume profile's doing. But there's really strong support here at 1675, and this bullish lower wick and the green close of the candlestick strongly suggests that price is bouncing up off this support. I'll expect a reasonable reaction at this point that supports the main Elliott wave count. This is not a bullish candlestick reversal pattern though, because the open of this candlestick is within the real body of the prior candlestick, so it can't be considered a piercing pattern, sadly. On balance, volume has no new range, no signal this week. RSI neutral. ADX finally caught up and is telling us that there's a downward trend in place at the weekly chart level. Stochastics oversold. ATR flat as prices overall is moving lower, and money flow index just dipping into oversold. At the daily chart level, there is a candlestick reversal pattern. The Thursday session, this is a really good looking bullish candlestick or bullish engulfing pattern, and it has support from volume. This supports the view that a low may be in place, particularly as it comes in the context of ADX reaching extreme, not very extreme, but extreme, and RSI being oversold for quite a while. There might be a little bit of bullish divergence here, but I'm not going to note it, because if there is, it's so very, very slight. But it's been oversold for a while now, and ADX is extreme, so in those conditions, when we see a bullish candlestick reversal pattern, we give it weight. This supports the main Elliott wave count. There's also a bullish signal from on-balance volume. It's breaking above weak resistance. This is a weak signal. It's not strong, but it adds to the bullish case. Stochastics returning to neutral, but we're using RSI, which also is returning to neutral because the market's trending. ATR flat, and money flow index remains oversold. That's all from me with your gold analysis this week. I hope all our members are having a fantastic weekend, and thank you so much for your patience in the delay for this week's analysis. I'll be in the same place for the next 5 weeks, so there should be no delays for the next 5 weeks. Thank you all.